I'm here with Angelo Robles. Angelo is the founder of SFO Continuity, a family office mastermind, and he has his own family office structure as well. Angelo, will you tell us how do you work with your own clients on their asset allocation structure?
Of course. First, it all starts with that investment policy statement. You need to understand risk tolerance, time horizon, a variety of different factors. From there, which is relatively straightforward, even for an active allocator and investor like myself, you are correct. I need to have somewhat of a plan. So for me, I look at asset allocation as being effectively one of four: strategic asset allocation, tactical asset allocation. Some people utilize a barbell approach, and others may call it another variation would be core satellite. I think they all could provide value. To some degree, it's your perspective and it's what you're investing in and the timeline. And perhaps I could argue your tax sensitivity. So I've seen the largest families, multi-billion dollar families, and some, including that I've interviewed, deca billionaire families. So all four of those could make it into play. If I had to choose one that I do and that I think tends to be relatively, let's go with growing and more common among larger scale investors and family offices, that would be the core satellite. So a little bit of an understanding of core satellite, it means a part of our portfolio, often the core, is effectively relatively passive. If you look at the math and look at the numbers, most active managers, especially long only and long short and other strategies, do not over time, net of taxes and fees, beat passive approaches. And that's been proven year after year after year. Also, I know exactly what I own and I'm totally liquid. It has incredible advantages. So that may make up, and I won't bore you with a breakdown of what passive strategies per se, but that may make up 60 to 70% of my portfolio. But the satellite part is where I look to be more active in privates, especially having more capital and resources. I prefer, and many families I know, not to be passively an LP. That's nothing wrong with that for families that make that decision. And I'm open minded to certain situations where that could be a good fit. But I elect to be an active owner of private companies. I like to own and I like to control. I personally look at things like mobile home parks, RV parks, ranch land. I'm interested in cattle and ranch land. Some would say, because I'm probably on the smaller side for a family office, more blue collar type businesses where I think there's inefficiencies, but I'm buying into companies that are already net profitable. I simply just hopefully want to make them better. And there's certain advantages of owning them through my holding company that I have structured. So for me, that is the preferred asset allocation approach that I take. And I would say relatively, it's a more common approach. Now, I could argue in $5 billion plus families, you may see more of the endowment model. I actually think to some degree, only off the record, it's a little overrated. I think conditions have changed, and being too passive as only an LP investor, I don't think affords the family the luxury of continuity and engagement of the rising generation to be active allocators and to know how real businesses work, get their hands dirty, and get the experience of understanding the nuances of private companies.
Take a look at angelorobles.com and you can follow along with Angelo's theories on this subject.